Hello viewers, in this lesson we will learn about the Reserve Bank of India, functions, powers and control over banking in India. Objectives: to learn about the functions of the Reserve Bank of India, to learn about the powers of the Reserve Bank of India. Viewers, now we will learn about the functions of the Reserve Bank of India. Reserve Bank of India, called in short RBI, is India's central bank. As the central bank of the country, it executes multiple functions such as overseeing monetary policy, issuing currency, managing foreign exchange, working as a bank of government, and as banker of scheduled commercial banks, etc. It also works for overall economic growth of the country. The Reserve Bank of India was established in 1935 under the provisions of Reserve Bank of India Act 1934. The RBI also has three subsidiaries, namely Deposit Insurance and Credit Guarantee Corporation of India, Bharatiya Reserve Bank Note Mudran Private Limited, and National Housing Bank. The preamble of the Reserve Bank of India describes its main functions as to regulate the issue of banknotes and keeping of reserves with a view to securing monetary stability in India and generally to operate the currency and credit system of the country to its advantage. It has massive powers to monitor and control the currency flow and to discharge its statutory functions. Sections 20 to 45Y of the RBI Act contain the provisions on the functions as well as the powers of RBI. They are discussed hereunder. Functions. 1. Banker to government. RBI acts as the banker, agent, debt manager and advisor to the central government. It maintains and operates government deposits and also collects and makes payments on behalf of the government. Under Section 20 of the RBI Act 1934, the bank shall undertake to accept monies for account of the central government and to make payments up to the amount standing to the credit of its account and to carry out its exchange, remittance and other banking operations, including the management of the public debt of the Union. Under Section 21 of the RBI Act, the RBI has the right to transact government business in India. Under this provision, 1. The central government shall entrust the bank on such conditions as may be agreed upon, with all its money, remittance, exchange and banking transactions in India, and in particular shall deposit free of interest all its cash balances with the bank, provided that nothing in this subsection shall prevent the central government from carrying on money transactions at places where the bank has no branches or agencies, and the central government may hold at such places such balances as it may require. 2. The central government shall entrust the bank on such conditions as may be agreed upon with the management of the public debt and with the issue of any new loans. 3. In the event of any failure to reach agreement on the conditions referred to in this section, the central government shall decide what the conditions shall be. 4. Any agreement made under this section shall be laid as soon as maybe after it is made before Parliament. Under section 21A, the RBI can transact government business of states on agreement. Under these provisions, 1. The bank may, by agreement with the government of any state, undertake A. All its money, remittance, exchange and banking transactions in India, including, in particular, the deposit free of interest of all its cash balances with the bank, and B. the management of the public debt of and the issue of any new loans by that state. 2. Any agreement made under this section shall be laid as soon as maybe after it is made before Parliament. 2. Issuer of currency. Reserve Bank of India is the sole body who is authorized to issue currency in India. It issues and exchanges or destroys currency and coins not fit for circulation with an objective to give the public adequate quantity of supplies of currency notes and coins in good quality. While coins and 1 rupee notes are minted by the Government of India, the RBI works as an agent of GOI for distributing and handling of coins. RBI also works to prevent counterfeiting of currency by regularly upgrading security features of currency. For printing currency, at the present, RBI has 4 facilities at Devas, Nasik, Mysore and Salboni. The RBI is authorized to issue notes up to value of rupees 10,000 and coin up to 1,000. It is a monetary authority which formulates, implements and monitors the monetary policy of the country with an objective to maintain price stability and ensuring adequate flow of credit to productive sectors. Section 22 of the Reserve Bank of India Act 1934 gives the RBI the sole right to issue banknotes. Section 26(1) states that every banknote shall be a legal tender in India in payment or on account for the amount mentioned on it and shall be guaranteed by the central government. So, by default, a banknote issued by the RBI commands the value mentioned on it for any transaction in India, since it is a legal tender guaranteed by the central government. This default setting can be changed, called demonetization, in 3 ways. Under the current Reserve Bank of India Act 1934, it can be done only if, on the recommendation by the RBI, the central government issues a notification under section 26(2) declaring that any series of the RBI banknote of any denomination will cease to be legal tender from a particular point of time. The current Reserve Bank of India Act 1934 itself could be amended. This was done in 1956 to give legal certainty to the demonetization of 1946. A presidential ordinance or a separate parliamentary law could be passed. It could specifically override any other law, including the Reserve Bank of India Act 1934, as may be necessary. In the year 1978, demonetization was effected through an ordinance and then a parliamentary law. Demonetization and legal tender. Demonetization is the act of taking away the legal tender character of any specific denomination or series of banknotes. It is necessary to understand the legal meaning of legal tender. As per history, commodities have been widely used as medium of exchange called barter system. However, for a commodity to be accepted as a medium of payment, the receiver must be able to assess the exact intrinsic value of the commodity. Otherwise, the payer could easily get away by giving low quality commodities in return for more expensive goods. Therefore, transaction in commodities needs expertise and cannot be done by any layperson. This effectively restricted usage of commodities as currency. To avoid this problem, states started declaring certain commodities as legal tender and guaranteeing their value by law. Such value fixed by law would be independent of the intrinsic value of the underlying commodity and therefore could be used as a medium of exchange by everyone. Demonetization 1946. On January 12, 1946, the Governor General of India promulgated the High Denomination Bank Notes Demonetization Ordinance 1946. It declared that the high denomination bank notes of rupees 500, rupees 1000 and rupees 10,000 issued by the RBI would cease to be legal tender on expiry of January 1946. Demonetization 1978. The next round of demonetization happened in 1978. On January 16, 1978, the President promulgated the High Denomination Bank Notes Demonetization Ordinance 1978. This ordinance was subsequently repealed and replaced by the High Denomination Bank Notes Demonetization Act 1978 on March 30, 1978. By this law, banknotes of denominations rupees 1000, rupees 5000 and rupees 10,000 issued by the RBI ceased to be legal tender from January 17, 1978. Demonetization in the year 2016. On November 8, 2016, demonetization was effected in India through three legal instruments. The Ministry of Finance issued a Gazette notification, Ministry of Finance Notification 1, by which banknotes of denominations of the existing series of the value of 500 rupees and 1000 rupees ceased to be legal tender with effect from November 9, 2016. MOF issued another Gazette notification, Ministry of Finance Notification 2, by which it specified the denomination of the new rupees 2000 rupee note. The RBI issued a notification mentioning that a new series of banknotes called Mahatma Gandhi New Series, having different size and design, will be issued. The RBI also laid down a plan of action, including the process for exchanging the old banknotes with new ones. The Ministry of Finance Notification 1 mentions that the exchange of the old banknotes with the new notes will be allowed till December 30, 2016. The date has been subsequently extended till 31st March 2017. Both the Ministry of Finance and the RBI issued subsequent notifications to clarify and adjust for additional circumstances. However, unlike the methods adopted in 1946 and 1978, The 2016 demonetization is not backed by presidential ordinance or act of parliament. 3. Bankers Bank. RBI is the banker to commercial, cooperative and regional rural banks. The relationship is established once the name of the bank is included in the Schedule 2 to the RBI Act. Such banks are called scheduled banks. Those are entitled to avail the facilities of refinance from RBI subject to fulfillment of certain obligations as provided under subsections 2, 3, 3A, 3B, 4.2, Section 17 and Section 42 of the RBI Act. RBI also acts as a lender of last resort for all banks. 4. Supervisory and controlling authority over banks in India. Under Section 22, the RBI is the licensing authority of banking companies. Section 23 imposes restrictions on opening of new and transfer of existing places of business. It is the regulator and supervisor of the financial system of the country, which prescribes broad parameters of banking operations within which the country's banking and financial system functions with an objective to maintain public confidence in the system, protect the depositors' interest, and provide cost-effective banking services to the public. 5. Controller of credit. The RBI is the controller of credit. It can instruct banks not to give loans to traders of certain commodities, as for example, sugar, edible oil, etc., which presents speculations or hoarding of commodities using money borrowed from banks. It exercises credit control under Section 21 of the RBI Act, and it also controls the volume of credit in a quantitative way. It also governs the bank rates and regulates the CRR for scheduled commercial banks. 6. Collection and furnishing of information. The RBI under sections 45A to 45F collects and furnishes credit information to the banks and government. 7. Manager of foreign exchange. The RBI manages the Foreign Exchange Management Act 1999 with an objective to facilitate external trade and payment and promote orderly development and maintenance of foreign exchange market in India. The RBI performs a wide range of promotional functions to support national objectives. The students are advised to thoroughly study all the provisions under sections 20 to 45Y of the RBI Act. The basic functions are narrated afore. Viewers, we will now learn about the powers of the Reserve Bank of India. The RBI has massive powers to discharge its functions under the RBI Act and also other related legislations. The various acts administered by the RBI are as follows. Reserve Bank of India Act 1934, Public Debt Act 1944, Government Securities Act 2006, Government Securities Regulations 2007, Banking Regulation Act 1949, Foreign Exchange Management Act 1999, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002, Chapter 2. Credit Information Companies Regulation Act 2005, Payment and Settlement Systems Act 2007, Payment and Settlement Systems Regulations 2008 and amended up to 2011, and BPSS Regulations 2008. The Payment and Settlement Systems Amendment Act 2015, number 18 of 2015. Factoring Regulation Act 2011. Negotiable Instruments Act 1881. Bankers Books Evidence Act 1891. State Bank of India Act 1955. Companies Act 1956. Companies Act 2013. Securities Contract Regulation Act 1956. State Bank of India Subsidiary Banks Act 1959. Deposit Insurance and Credit Guarantee Corporation Act 1961. Banking Companies Acquisition and Transfer of Undertakings Act 1970. Regional Rural Banks Act 1976. Banking Companies Acquisition and Transfer of Undertakings Act 1980. National Bank for Agriculture and Rural Development Act 1981. National Housing Bank Act 1987. Recovery of Debts Due to Banks and Financial Institutions Act 1993. Competition Act 2002. Indian Coinage Act 2011 governs currency and coins. Banking Secrecy Act. The Industrial Development Bank Transfer of Undertaking and Repeal Act 2003. The Industrial Finance Corporation Transfer of Undertaking and Repeal Act 1993. The various powers of RBI are narrated hereunder. 1. Under the RBI Act, A. Under Section 18, the bank has powers of direct discount of bills of exchange or promissory notes. B. Under Section 21, the RBI has the power to transact government business in India. C. Under Sections 20 to 45, the bank discharges multiple functions and the power is also vested under many of these provisions. D. Under Sections 45A to 45F, the bank is vested with the power to collect credit information. E. Sections 45H to 45QB relate to the provisions on non-banking institutions receiving deposits and also financial institutions, and the RBI has powers to regulate them under these provisions. F. The RBI has power to regulate transactions in derivatives, money market instruments or securities under Section 45W. G. Under Section 54A, the RBI can delegate its powers for efficient administration of the functions of the bank. H. Under Section 54AA, the bank has power to depute its employees to other institutions. I. Under Section 58G, the bank has power to impose fine on NBFCs for default and contravention of the provisions of the Act and other allied legislations. J. Under various provisions of the Act, the RBI can make regulations. 2. Under Banking Regulation Act 1949. 1. Under Section 21 of the Act, the RBI has power to control advances by banking companies. 2. Under Section 35, the RBI has power to inspect the banks. 3. Under Section 35A, the RBI has powers to give directions. 4. Under Section 36, the RBI has further powers and functions. 5. Under Section 36AA, AB and AC, the RBI has power to remove managerial and other persons and appoint additional directors in the banks. 6. Under Section 38A, the RBI is the official liquidator in case of winding up of banks. 7. Under Section 45, the RBI has power to apply to central government for suspension of business by a banking company and to prepare a scheme of reconstitution or amalgamation. 8. Under Section 55P, the RBI tenders advice in winding up proceedings. 9. Under Section 45Q, it has powers to inspect in case of winding up proceedings of banks. 10. Under Section 45R, it has powers to call for returns and information. 11. Under Section 47A, the RBI has power to impose penalty for contravention of the provisions of the Act. 3. Under the various provisions of FEMA and other legislations narrated afore, the RBI has massive powers to manage and administer the legislations and also impose penalties. It functions independent of the government, and sometimes the government has to abide by the decisions of the RBI. Well, viewers, I hope you have enjoyed all the 12 lessons we have discussed so far and got the appropriate knowledge over it. Please go through all the relevant provisions of the different legislations, including the RBI Act and the Banking Regulation Act and the allied legislations. I wish you all the best. Thank you.